Hi, accounting students. This is Mrs. Bloomquist. I'm sorry that my voice is so scratchy and rough as I sit here and record this video, but I just can't quite seem to get out over my cold, and so you have to just listen to me talk this way. We are currently working on Chapter 15. We're calculating federal income tax in Lesson 4. And just remember that Chapter 15 deals with preparing the adjusting entries and a trial balance. So we're getting close to wrapping up the accounting cycle. And you want to know that Lesson 4 is that last lesson in Chapter 15. Now, as we think about what's going on, particularly in this lesson, you want to just remember that corporations have to estimate and actually prepay the amount of taxes that they think they're going to be responsible for at the end of the year. So throughout the year, they send in estimate payments, and you want to make sure that as a business owner, you're sending those payments in. And in this lesson, what you're going to be doing is figuring out if the business owes additional taxes more than what was estimated. All right, so as we look here for the three objectives of this lesson, there's going to be posting some adjusting entries. There's going to be adjustments to federal income tax payable, and then preparing an adjusted trial balance. So the first step here is to look at the adjusting entries. And if you would like to see them in a little bit bigger print, in your book it's page 455. So you can see this is page 15 of the General Journal, and we are putting in the adjusting entries. So you want to make sure that you put the heading in here that we are working with adjusting entries, and then again, all of the adjusting entries are happening at the end of the year. We're debiting and crediting uncollectible accounts expense and then allowance for uncollectible accounts. And you'll see we have an income summary, merchandise inventory, supplies expense for office, supplies office, supplies expense store, supplies for the store, and you can see we go down for interest, and then we're looking at depreciation. Okay, so you can see that we are going to be posting our adjusting entries, and so we're going to be taking the numbers from our General Journal, and then we're going to be putting this into the general ledger here. So you can see in the allowance for uncollectible accounts on the 31st from the General Journal 15 that we are crediting the 2384.10, and then we are debiting the uncollectible accounts. Okay, so you can see we're posting the debit, we're posting the credit, and then we're tying through the account numbers. And so here's the account number that ties back onto our General Journal. And so just for tracking and making sure that we have good records and we can follow all of our transactions here. Okay, so you calculate income before your federal income taxes. So a trial balance is prepared after all of the adjusting entries are posted, and this is now the adjusted trial balance. So you can see in nice tiny little print what is on page 457, where we're looking at all of the account titles for our general ledger accounts, and then the balance is for all of the accounts except the federal income tax expense. So you can see where our balances are here. And then we're going to go ahead and calculate the total account balances of the income statement credit accounts, and then we're going to include the account balance of the income summary. So you can see right here, we're going to total all these up, and then we're going to calculate the total account balances of the debit accounts for the income statement. So we've got our debit and we've got our credits, and then we're going to subtract the total of the debits from the credits to go ahead and figure out, do we have net income before our federal income taxes? And whoops, it looks like in this case we do. Okay, and you can see right here, federal income tax expense empty because we're doing it before. Okay, so now we need to actually calculate out our federal income tax. So just so that you know, different tax rates are applied to different levels of income. We have a tax rate that applies based on how much income is earned. So each tax rate and then the taxable income amount on the line is called the tax bracket. So the tax rate that's associated within those brackets is the marginal tax rate. And here you're actually seeing the tax schedule, and what you want to pay attention to is if you made more than $0, woohoo, I made profit, but not over $50,000, you pay 15% in tax. Once you get to $50,000, then you pay 25% tax on the next $25,000 that you've earned. So the 15% tax rate is what you pay on the first $50,000. The next $25,000 you pay 25% on. The next $25,000 you pay 34% on. And you can see what the rates are for each next income bracket. Sorry, I don't mean to cough in your ears. So what you do to calculate this then is you look at the net income before federal income taxes, and it looks like it's over $103,000. So we're in this category right here. So what you see then is that the first 15% on 50,000, and then 25% on the next 25, and then 34 on the next up to 100 is a total of $22,250. And then every dollar over 100,000 you pay 39% on. So that's what this calculation here is running for you. That you're going to be paying on the $3,518.97, you're going to pay 39% tax on that. So the marginal income tax is $1,372.40. So you just go ahead and say, on the first 100,000 I had to pay $22,250, and you add the marginal tax, and the total federal income tax that has to be paid by this company then is $22,622.40. So now you just need to go ahead and journalize the adjusting entry for the federal income tax payable. So this particular business has been paying $5,000 in income tax for the quarterly statements. So in April and June and September and December, they paid $5,000. And now we are going to post an adjustment to make sure that we know that we have to pay a total of $23,622.40. The income tax payable then needs to be a credit of $36,22.40. Okay, so now we can see in our general journal that we're going to put this adjusting entry in here: federal income tax expense and federal income tax payable, and then we're going to post it into the general ledger. And we're just tying back the different account numbers so that our record keeping system is nice and clean. If you want to see a bigger version of that federal income tax table, it's on 458. All right, so completing the adjusted trial balance. This hurts my eyes. It's so little. It's on page 460. And basically what you want to pay attention to is that we are now going to go ahead and add in that adjustment for the federal income tax payable and the federal income tax expense, and that is going to help us to come up with our adjusted trial balance information. All right, so we're entering in both of those numbers. We're going to total, prove, and then rule our trial balance. So we're going to total everything up, and remember single lines versus double lines and what that means. And now we have good information that is at the bottom of our adjusted trial balance. You definitely want to pay attention to the fact that taxes must be prepaid for those federal income taxes, and you want to consider what would happen for a company if they actually don't pay their estimated quarterly taxes. And the bottom line is, it can be hard for a business to estimate their taxes, but if they don't pay, oftentimes they have to pay some kind of late penalty. And the federal government doesn't mess around when it comes to collecting taxes. So those late penalties can be fairly significant. All right, so how does a trial balance serve as a checklist for preparing those adjusting entries? Businesses get to examine each account and look at and determine if the account needs an adjustment. So that the trial balance is actually really helpful as you think about what adjusting entries might be necessary. What order can adjusting entries be journalized? And you want to do it according the order blah blah blah. Sorry, the order that the accounts appear in the trial balance, beginning with assets or with revenue. Which accounts are totaled to determine net income before the federal income taxes? All income statement debit accounts, excluding federal income tax expense, and all income statement credit accounts. So you're looking at the income statement debit accounts and credit accounts except for federal income tax expense. What is the bracket minimum tax and then the marginal tax rate of the 25% tax bracket? And again, here's where you would want to look at the actual tax table or the rate schedule. It's on page 458. So you would see that for the 25% tax bracket, you're looking at a minimum of $7,500, and then the tax rate is 25%. And that would be the $7,500 is what you pay at the 15% rate on the first $50,000. Okay, so at the end here, you definitely also want to be thinking about one additional question, and that is that how is it that corporations actually can predict the amount of net income so that they can estimate their taxes? And you know, the reality is they are doing estimates, and they have to use some kind of either industry comparisons or prior year comparisons or looking at some sales projections and income and expense projections for businesses to try to accurately represent and estimate so that they don't get into trouble with those quarterly tax payments. And it can be a fairly significant undertaking, but it's really, really important that businesses accurately represent and estimate those taxes that are going to be payable. So from here, you are now done with chapter 15. You want to make sure that you complete the forms online, the work together, and on your own activities. And then from there, go ahead and complete all of the applications. Don't forget, you want to have all of that material done, or else you'll end up coming to class for what would otherwise be optional check-in day. All right, good luck, everybody. Talk soon.